Primary market of government securities. Government securities are issued by RBI through a process called as auction. There are two types of auction. One is yield based auction, the other one is price based auction. And again, price based auction we have two types. One is uniform price auction, the other one is multiple price auction. So these are the process through which RBI issues government securities for the first time or to the investors directly. So we will be seeing about these activities. Yield based auction of government securities. Normally this type of auction is carried out in case of a new issue of government security. Here investors bid in yield terms, that is they bid in terms of yield like 8.91% or 8.5%, etc. It means that I am an investor, I am bidding for this government security and I am demanding the coupon rate here, I am demanding the yield here. This is the yield I require. So 8.91% is the yield I require, 8.3 is the yield I require. Likewise, here the bids are arranged in ascending order and the cutoff yield is arrived. Why bids are arranged in ascending order of yields? Because see here, as you know, government securities are nothing but a kind of loan, isn't it? So government is the borrower and we are lenders. Assume you are a borrower and you have two lenders. One lender charges 10% interest, the other lender charges 11% interest. Obviously you will go with 10% lender, isn't it? So lower the yield or lower the coupon we demand, higher is the chances of getting government securities or allotment. So yield based auction, in yield based auction the bids are arranged in ascending order of yields and we will decide the cutoff yield. Okay, we will decide the cutoff yield. Bids at or below the cutoff yield are accepted. Bids at or below the cutoff yield are accepted. We will see with an example, then you will understand clearly. See here, this is a sample illustration. See, the maturity date is Jan 12, 2026 and the coupon nowhere government will mention the coupon here. It is determined in the auction. It is determined in the auction. Coupon is nothing but the yield. That is why we call it as yield based auction. And yield will be decided, cutoff yield, that will become the coupon rate. Okay. And see the auction date is Jan 11, 2016. Jan 11, 2016 and the settlement date or issue date of government security is Jan 12, 2016. That is T+1 settlement. Here the notified amount is 1000 crore. Here the notified amount is 1000 crore. That is government has planned to issue government securities for an amount of 1000 crores. Okay. So again I repeat here, coupon will not be said in advance because in yield based auction we will quote yield and the cutoff yield becomes our coupon rate. So we will see how it works. This is in continuation of the previous slide wherein we have seen that issue of 10-year government security, that is 2016 is the start date and end date is 2026 and the notified amount is 1000 crore. So the government has planned to issue 1000 crore worth of government securities and see this is the process. See here the bids are arranged in ascending order of yield. So the first bidder has quoted yield of 8.19% and he has bid for 300 crore. And see the second bidder, he has quoted yield of 8.20% and he has bid for 200 crore. And see the third one and fourth one, so on. So you could see that the yields are arranged in ascending order. Okay. And see the fourth column, cumulative. See the first bidder, he has bid for 300 crore and see the second bidder, he has bid for 200 crore. So the total amount bid for becomes 500. So that is mentioned in the fourth column, that is cumulative. And see, the fifth bidder, he quotes an yield of 8.22 percentage, and he bids for 100 crore. And at this point of time, the total amount bid for becomes 1000 crore. So the government has planned to issue 1000 crore worth of government securities, and it has reached 1000 crore here. So the government will stop at this point of bidding, that is, they will stop at fifth bidder. The yield at which the fifth bidder has bid for, that is 8.22 percentage, that will be taken as cut-off yield. That will be taken as the cut-off yield. So all applications above this cut-off yield, that is 8.23 or 8.24 or whatever it is, all applications above cut-off yield are rejected, and all applications at or below cut-off yield are accepted. And see how the price is calculated. See the last column, we have given the price also, and as I have mentioned earlier, this cut-off yield 8.22 percentage becomes the coupon rate. Now the coupon is discovered as 8.22 percentage. Now the price, this price, corresponding price becomes the face value. So the face value is 100, the coupon is 8.22 percentage. Accordingly, we have calculated the prices for different yields. So at a price of 100.19, that is corresponding to 8.19 percentage, and price becomes 100.14 corresponding to 8.20 percentage yield. And we have a separate formula for calculating price, and that we will be discussing later on. But understand, price is calculated based on the cut-off yield. Cut-off yield is taken as the coupon rate, and the price at which cut-off yield is known as face value or 100. So accordingly, every bidder has quoted a different yields. Accordingly, the prices are calculated. So this is an example. We will see a variation of this in the coming slide. See here, here also everything remains same, but see, we have one more bidder, the sixth bidder. He has bid for 100 crore, and the yield he has bid for is 8.22 percentage. So earlier we have seen the cut-off yield is 8.22 percentage, but here we have two bidders at same yield, that is 8.22 percentage. So now how to allot government securities? So in this case, see here, those who have bid, that is the first four bidders, like 8.19 or 8.20 and 8.21, etc. That is, those who have bid less than the cut-off yield, they will be given allotment based on the amount they bid for. Okay, so the first bidder will get 300 crore worth of government securities. The second bidder will get 200 crore worth of government securities. The third bidder will get 250 crore worth of government securities. The fourth bidder will get 150 crore worth of government securities. So totally 900 crore worth of government securities has been allotted so far. Now remaining is 100 crore. But for this 100 crore, there are two participants here. Fifth bidder and sixth bidder, they are quoting same yield, 8.22 percentage. So that is the cut-off yield. Now the allotment is done proportionately, okay, on pro rata basis. That is nothing but each bidder will be given 50 crore worth of government securities. So the fifth bidder will get 50 crore worth of government securities, and the sixth one will also get 50 crore worth of government securities. So this is how it works.